Heidi ho, everyone, and welcome aboard. It is a brand new week of Trading Buddies, and I'm glad you have joined such a show and become one of our trading buddies. Please treat it as though it is your show, because that's exactly what it is. It's all about you and what you are seeing, what you perhaps wanting to share with us. We will share with you until such times as you're ready to do that. And of course, it isn't compulsory, but please feel free to join in at any stage with a chat in the chat box. And if you want to come on screen or on mic, you're only too welcome to do so as well. All right. Those of you who are here for the first time won't have any idea what we get up to in this show, but it is, as I say, all about sharing, and Trading Buddies, Ash and myself, are apt to do that. And hopefully we can share something with you that you haven't perhaps come across before. And if that's the case, we are glad. And again, if you want to share something with us, please feel free to do so. Righto, let's get into it, shall we, and see what's going on around the place. I haven't traded pound breakout for yonks. Actually, I did a couple of weeks ago, I think, and got into a bit of a mess there with that one. Actually, I'll update another mess that I got into last week. Not having a very good trot this month thus far. Righto, with the pound, what we're attempting to do here at London Open is look for a breakout of the previous range. The previous range that I choose is the day before, in this case Friday, added to the current day. So the range is pretty clear. There's the low, and there's the high. So what we're saying is, if there is a substantial reward available for us as a breakout here, we would look to trade the breakout of this range. Now, a substantial reward, of course, is better than one-to-one in this parlance, and I'd be seeking one-to-one to take our first profit level, move our stops to a safe place. So I need to see a clear run to the high side before we hit resistance, and clear run to the downside before we hit resistance. So I'd be adding 5 pips to that, taking 3 off that, making our risk about 150 pips. So I need 150 pips of clear water before I hit a resistance level. That's not available on the high side. It may well be on the low side. Let's have a look at that. No, I don't think it is. So 150 from there. No, it's not on. So it's a no from me. I'm not going to trade the breakout on pound versus US dollar this day. Would I be interested in trading the pound versus the US dollar whilst we're here? Let me get rid of a few of these levels. As you can clearly see, we've smashed through the market structure. But to my mind, we have probably completed the most recent cycle. Most recent cycle, of course, is off this double top. And if I draw a line through the middle of that, what we see on the left-hand side is generally what we see on the right-hand side when the market does reverse. We're very, very near to that point. Maybe we've even bounced off it at this last week's candle. So yeah, look, there may be a little bit of downside left here, but I'm not that keen, I'd have to say. And against the US dollar, of course, we could look at the US dollar index. And the US dollar index at this point, if you erase all of my lines there, there really is no strong price level at which this should turn. Maybe there's a little bit of support there and there. I can't go back any further than that on this chart without altering the parameters. But if I use this monthly trend line, which I've got to say is a little bit iffy, I've probably used a little bit of license in joining it up to there. But you can see the top of this channel is very, very clear. And to my mind, although we have broken through these highs here, we are still in the resistance zone. I hesitate to call it a sell zone, but we are certainly at a resistance zone in my humble opinion. So it's at that point that I then have to pay attention, and I'd be looking for price to either bounce off here or maybe get above it, then come back below it retest it, and that would indicate to me that we're going back inside this range. I wouldn't want to be looking to scalp it off the top here, but if I saw a reversal situation, so double top, bearish engulfing, head and shoulders, something like that, if I saw that sitting here, maybe on the daily chart, then I would look for a lower high before I attempted to get into this short. Don't want to go long at this point. It is overbought, clearly overbought in my humble opinion, and it does need to slow down at some stage. What causes that? Hands up, don't know. But that's my thought process. Maybe there is a little bit left in this. Until it turns and gives me that lower high, I can't trade it short, which of course means that it's very, very difficult to be trading the pound versus that currency index long, although it is completely oversold. Again, for a scalper, you might find a way into that. To me, I've got to wait and see. Get it again, double bottom, bullish engulfing bar, which we've got. There it sits. Now I'd like to see it hit resistance, come back and fail to take out the lows, therefore giving me a higher low. Then I can look to trade it long, but not until that occurs. And, you know, to be fair, that is the direction that I would prefer to trade this, obviously. Don't want to jump into the shorts. So that's going to be pretty common across the dollar pairs. The dollar index is pretty clear. It has broken through that that resistance level that we've been looking at for the last few weeks, but it is still at resistance, in my humble opinion, top of that range, top of the monthly trend line. So it'll be an interesting ride. What I'm really saying is I don't want to trade it at the moment. I'll just wait and see what happens. So my favorite pair, euro versus the dollar, that I like to trade on a 30-minute chart, of course, more than anything else when I can, and that's been rare lately. We've already lost our edge on this. Our edge, of course, being the untested nature of the daily pivot. That has been fulfilled. Daily pivot has been tested. But look at the range that we're currently in. Very, very tight there between, what, 104.15 or something like that, and 103.90. So there's a very, very tight range in there since Friday settled down after this, again, a big V. Crazy price action. Volatility is still extremely high. And I think, you know, going further with that, it's far easier to trade on the smaller time frames at the moment than it is on the bigger time frames, because you're getting virtually no movement in a day on the daily chart with price action like that. Yet, if you can find a way in, there's plenty to be gained trading from the top of ranges to the bottom of ranges to the top of ranges. And so we are in this range here, which is so tight. I mean, you're not going to make any money out of that. G'day, Lewis. How you doing, mate? You're not going to make any money here unless you're a genius and maybe trading on a 5-minute chart, which is not my thing. But it is, of course, George's thing. He'll be joining us shortly. And he may be even able to tell you how to find a way into euro dollar. You might have a look at that as well as some other things later in the show. But for mine, at the moment, I really don't want to trade against the US dollar. Certainly don't want to be buying here at the moment. But as soon as we get a signal off, as I said, the top of this range, this resistance level that we currently sit at on the dollar index, until I get a signal here that it's either going to go to here or give me a false breakdown back into the channel, it's really tough to trade with or against the US dollar, in my humble opinion. Have got a couple of favorites this week. Game changer bars are scant, I'd say. There are 1, 2, 3, 4, 5 of them. This is one, and we were calling this a couple of weeks ago, or was it last week? Can't remember, where we'd hit this extreme confluence area on euro versus the pound, and it has reacted off it. Now, if I use all of these lines, it's like Grand Central Station here. I've got lines all over the place, which is not the way I like to trade, but it's pretty clear to me what's going on here. And we've been inside this broadening pattern for quite some time, and every time we hit the top of it or go near to the top of it, I have changed it a little bit because it used to sit across here. Why have I changed it? Bloody good question. It may have appeared on a daily chart. I think I've just used those highs because it coincided with the horizontal level and the resistance trend or trade line. So that super resistance area is still there. We're getting exactly what I would like to see here right now. And I'm thinking about the next move is probably down again inside that broadening pattern. Problem we've got at the moment is this level. And I could put another trade line across here. So it looks for all intents and purposes as though this will bounce and go long. And I can't argue with that, frankly, and it is doing it at the moment. But if I am to use this little line across here, it brings a completely different complexion to this because it has broken down underneath this resistance area and is now retesting that. Think if this closed on the weekly pivot or even above the weekly pivot, I'd be very, very interested in going short here. It's a dangerous place, however, because we do have recent resistance that's going to become support perhaps. So we've got to get through that level. So the best place to enter this is definitely not there. It would be up here somewhere. I can't do that on the daily, but if I squeeze down into the 4-hour, maybe even the 30-minute charts later on, maybe we can find a false break of resistance here if we get a high. I do like the look of the 4-hour chart, I think it was, yes, because we've had a clear false break of this, what is it, 8680 area. And we've gone straight through that down to the weekly pivot where we found support, but we've retested the breakout range where we broke out, false broke that back underneath, and now we're retesting that. So this is a crucial level for this pair, in my humble opinion. And I would dearly love to see a weekly pivot test. So I'm on alert with Euro Pound looking for shorts, but I can't trade it just yet. Have to wait for that signal. There's two others I want to watch closely this week. It really is all about the Euro for me this week. I'm not sure why. They're just lining up that way. Euro Yen is potentially already showing me a head and shoulders here, most certainly. Necklines through there, if that's the case, it's been hammered and retested. That indicates to me that we've got downside coming. It's a PRICK of a place, however, to go short because of this level. So again, smaller time frames up here somewhere would be absolutely ideal. Can I see it at the moment? Answer no, I cannot. And I don't know what I need to see, frankly, to be able to get into this. Probably a break of resistance, a false break of resistance. I'm talking a long time before it gets to there. So I really can't see anything to trade that off at the moment. Maybe if we got a weekly pivot test and a high test bar on there, it would look good. I'm not sure I want to be jumping into those at the moment either, given we've just traded one that failed. And that was Aussie Kiwi. Aussie Kiwi, last week we got into this by less than 1 pip. I thought I had plenty of room underneath there. Obviously, I didn't. And we've been spiked out today on China news, I think it was, where the Aussie itself has whipsawed a little bit. So that's a 0.5% loss. Now looking, again, like a false break of this level, but the price is just all over the place here and I can't really pick it. If I'm tempted into this, and I'm not, I would be looking to place an order underneath that bar there. But look what we've got. We've got the daily pivot and the weekly pivot there protecting the downside. I think this is a bit of a mess now, but I do like this, and the retest of that area. So it's failing again here on the shoulders, in my humble opinion. It's just too dodgy to get in at this level. So I'm looking for another false break, maybe again off a smaller time frame on Aussie Kiwi. I mentioned Euro Yen. I didn't mention Euro Kiwi. I think I've got a chart of Euro Kiwi here somewhere. Or do I? Oh, there it is. Yep. Okay, why Euro Kiwi? Well, it's the same pretty much as what I just described on, was it Euro Yen? I think it might have been. there's a big hint of a head and shoulders sitting here. I know it's convoluted, and it's really convoluted, but we have had, if that is a head and shoulders, we've had a break of the neckline, which is kind of through here somewhere. The level's very clear anyway, and we're now retesting that on the monthly chart. Weekly showing me a potential game changer bar, big high test bar at that level. I do like the fact that it's got a green body, but the price is running away from that area, gapped up and still going. So that gives me probably a better price to get in if I want to get in short. Of course, the trend now is very, very bullish, and we're getting a reaction off that line as I speak. Again, lower high in here, I do get interested in trading short Euro Kiwi, and maybe that happens even today on a smaller time frame. 4 hour, if that were to become a high, and it's not yet, then I'd be looking for a false break off that, or anything up here that gives me something in terms of resistance that can break is also going to be good. Of course, if it goes through there, then we'll have to rethink the whole situation. But at the moment, I'm extremely bearish the euro. I wonder how that sounds from a data point of view. G'day, Ash.
Hi, mate. How are you?
Yeah, look, I'm okay. A little bit pissed off with Aussie Kiwi, but
interesting what you're saying about the euro pound is just testing a channel area, which is fascinating actually, because I agree with you about the euro. Yeah, if you look at the euro on a weekly, maybe.
Yep.
Lots of lines, yeah. If you look at it on the weekly, and if you draw a line, draw an equidistant line.
Hang on, I'll get rid of all this garbage first, because I know what I'm looking at, but I just wanted to show everyone else, that's all.
Yeah, no worries.
Equidistant line from where, mate?
If you draw it actually from the lows looks like June lows, and then the Feb lows. June 21. Is it May? Actually, May 21. The low in May 21.
Yep.
And extrapolate it to the right to get the Feb one back.
This one.
That one, yeah. And then go yeah down to the Feb lows, right at the low of the February level. Hit the low, the lowest point there, and then just. And then if you move the upper line up.
What do you think? Hang on.
No problem. Yeah, move that one up. So there. Now that looks like a really nice channel area to me. And then if you zone in to the dailies, which will obviously leave that channel there for us, then what we see is a pretty nice looking test off that particular level. So I think today's bar could be interesting. We got some economic reports in around about an hour and a half, is it? Maybe near 2 hours. Economic forecasts coming from the EU. They're going to be pretty bleak. I mean, I agree with you. The euro is very bearish. Against this particular currency, maybe not so. That some of the issue is that they're both causing each other problems with the Northern Ireland Protocol, and you know that the trade in the Irish Sea is just and you know it's coming up as another issue. Couldn't be a worse time to be discussing Brexit issues, but as we knew, you know, Brexit wasn't going to go away. And the issues weren't going to go away, and that's really where we find ourselves. So the UK and the EU are really cutting each other, while they've got these external factors coming from Russia and other things going on. So difficult to kind of pick the winner out of these two in many respects. But I you know, the UK is in terrible shape. Don't like the pound. Don't like the euro either. So you're basically picking the worst of the two.
Race at the bottom, you reckon?
Erase the bottom, and you know that makes this particular chart pattern quite difficult, which probably suggests you want to wait for the end of the day. You know, how do people ultimately absorb those numbers that are going to come out from the EU today, or certainly for the next few hours anyway? Maybe in the US session it might get a bit more clarity. As you said, though, China showing retail sales negative 11.1% from negative 3.5%. Not good numbers for the world, never mind for China. Industrial production down negative 2.9% over 5%, from 5%. So we're seeing contraction in China. Obviously, that's going to affect the Aussie, also going to affect global equities, which we are seeing sort of filter through today in some of these global equities. And really, that was off the back of Friday when we had some inflation numbers that were just a little bit lighter than we'd been seeing. So we saw a bit of a rally on Friday. In fact, we saw a massive rally on Friday. In fact, I'll show you my charts because...
Actually, before you do, can I just show you one more thing on this chart before we leave?
Absolutely, mate, yeah.
In fact, this is the exact level. Obviously, today is the turning point, or should be the turning point. And I don't know if you saw earlier that this has got two faces, this level, because if I use that trade line,
yeah,
I've got a false break. If I use this trade line, I've got a break and retest.
Yeah.
And I think what you just said is showing that it's very, very unclear. But there's one more thing, as our good friend Steve Jobs used to say, and that is, if I put this on my chart and use, I'll pick a low in here somewhere and pick the highs in here somewhere, probably there, you've got one little, two little, three little Indians, but it hasn't come back in here yet, and that makes just that more difficult. So we're really on a precipice here, but if I get the right signal, then I think I'm willing to trade it short.
Yeah, do you know, it's interesting because we obviously sort of been in this situation where the US dollar has just rallied and rallied and rallied. And at some point that's going to stop, and trying to, ascertain when that's going to be is difficult. And if that was to happen, where do you put your money? Now, I would have gone to Australia quite happily. Australia is, the Aussie dollar would be on the top of my watch list probably for a long, if things start to turn around. But the issue for the Aussie dollar is that, it's a commodity-based exporting economy, which is good, as commodity prices go up. But eventually they will level off with the lack of demand, because what we've seen in China is case in point. Chinese economy starting to weaken is not good for the Aussie dollar, because it will kind of crush down some of that demand. And we're seeing that with a CAD as well, with oil. The demand is being a bit crushed down from the Australian economy, but that could filter right the way through. If you read any of the PMI reports, you will start to kind of like notice this trend of the Purchasing Managers Index, so basically saying goods are just really expensive. For us to kind of buy this stuff, it's really expensive. So that will be passed on to the consumer. And eventually you're getting this.
I can certainly attest to that.
Right. Yeah. Well, exactly, mate. I mean, if you're sort of like, got anything in a supply chain, you will have felt this stuff. And that's really what we've got going on. So difficult then to back the Aussie dollar in this current environment. Is it, what we want with the Aussie dollar is it to be a growth currency? Can we get growth in this kind of environment? It's kind of, it's a challenge. It's a huge challenge for things. And that really sort of like puts us back to equities. Now, if we just have
I'll give you, sorry, I hate to do this to you, but there is also one more thing with the Aussie. And there's a federal election in 5 days' time, 6 days' time, Saturday, 5 days' time. Right. Now, the Labor Party is widely tipped by the polls to wrestle government away from the Liberal Party.
Right.
Now, I don't think the market's going to like that either. Yeah. Because traditionally, the Labor Party are not good money managers. Let me put it that way.
Yeah.
And that said, they got Australia through the global financial crisis basically unscathed. So I don't know whether the 21st century puts a change to that, because we really haven't seen Labor in government since then. So it could be interesting.
You might see a knee-jerk. There might be a knee-jerk reaction on Labor getting in, and as you say, after that, who knows? Where are we at? But same in this country, the Labour Party doesn't tend to be particularly good for markets in many respects. But the Tories are in right now, and you've got to say, I mean, I've got some shorts in the market right now, and I'm probably just going to leave things be. Do you know? I have to say, mate, I'm finding this whole thing getting eminently more difficult to try and sort of like trade on a day-by-day basis. So I kind of thought this morning maybe what I might do is kind of get in my positions and just let them play out to where I think it's going, because I don't think this market is going up. I think that we're going to get a recession. There's lots of recession kind of calls. The data and the news events point to a recession. They point to contraction. Has that yet been priced in? You'd have to say probably not. Certainly not with the FTSE 100. Now, I've got a short on here that I actually entered on Friday when I saw the price come up to this point, and I tried to get into a short over. I placed this on Friday.
Just missed.
But, just missed getting triggered. Yeah. So this one, I'm just going to leave be. I mean, I could sort of like mess around with a short-term move to the downside. But I might just leave this and see what happens. So I'm looking for us to come down here, but probably I'm looking for us ultimately to come down to this level here. So I might even take this take profit area off and just see if I can just follow this thing down. If it goes a terrible price, there's a huge gap between where I've got in and where we are now, almost a 2% gain before I'm going to start getting any sort of money here. But if it pops up again, then hopefully I'll get in the monthly pivot, and then we'll see if things turn around. But yeah, not very positive right across the board, mate. I mean, we've got the FTSE looking like it is going to weaken further. The Australian index as well, looking like it's going to come back further. But my point really with this stuff is, if we are to get a recession, the move that we've had so far to the downside has been relatively vicious. If we look at the sort of like the monthly, we are getting closer to the low end of the range, but this still doesn't look like we're pricing in contraction in the economy, in GDP. Same with the FTSE. It doesn't look to me like we're getting, we're anywhere near close contraction in the economy. I think we need to come down a lot further to actually reflect the fact that earnings are going to be affected negatively by this. If we go to the Nasdaq, probably a little bit of a different picture in many respects, but I still think because the Nasdaq exploded so much, Cape ratios at 59, I think they were, where if you compare that to the FTSE, it's more like 30. Sort of like the US economy, the price to earnings ratios just exploded. And they were always going to get brought back down to earth if there was some kind of external problem, or if there was some sort of problem. And that's what we're getting. We're getting this problem sort of seeping through. So even though I think the Nasdaq, has actually come down, has it come down enough is the big question. And the answer to that is difficult, but I would suspect probably not. I think this has probably got some further to run. I
think if you got a rally, you'd be very tempted to sell it, wouldn't you?
Yeah, I think so, mate. I think so. S&P, I think, looks a little bit more gentle, and I think that's got further to run. The question that anybody should be asking themselves really is, have we come down far enough to revalue the earnings if there is a recession? Because we haven't got it yet. Recession hasn't come in just yet, but it's probably going to come. Has it come down far enough? Probably not. So I think we've got some time to go. So I'm getting short, and I'm probably just going to get short and stay short, mate. We'll see how the weeks progress, but for right now, I'm just on the short side of everything.
All right, mate. I'm tempted to get into them myself, as I keep saying. Yeah, haven't found a way. George would find a way, because it all happens on the small time frames, and I've got to tell you what, George, I wish I was trading small time frames instead of the ones I am at the moment. Last couple haven't been real good. How you going?
I'm going very well, thanks, mate. Yeah, we, always, if you're patient enough, they do come your way. What was interesting, I think a few of the guys on the group said through last week's Wednesdays at the market with George, the second Wednesday of every month. And we kind of labored along, waiting for things to set up, but keeping track of things on our charts. And we were rewarded for those who took the trades with gold, and gold sold off. So that was quite nice, 3-1 in that particular session. But I think the point of that was, even though you're on the 5-minute time frame, it's not every candle is an opportunity, right? You still have to sit through and wait and watch, and hopefully get rewarded along the way. What I just want to show too, so today it's quite fascinating listening to what you guys were talking about, and you know, the drivers behind the economies. But looking at Euro, so you know, I always have this little, I don't know if you can see it, what I should be looking out for today. But Euro, I'm looking to overall, it's, you know, the market is selling off. But on my time frame, I'm looking to see if I get a break above the high of last week. So call it yesterday as I think of it. Pull back and test. Looking to go long, but I'm only going long to this level of resistance. So I really got to watch what happens at the low of April. I'm going to look at what happens here, just at the moving average as it comes down, which is also the measured move of the trading range breakout of yesterday. So a lot of resistance there, and as well as this descending trend line. But you know, if I get a setup to buy, there's huge opportunities just to take it long and track it until we get here. Assuming that opportunity comes, and as we get to the US markets, we get into this range, then I'll be out of the longs and looking for my major trend reversals to go short. So this is, I'm definitely keeping a watch on Euro today. Another one that may be of interest to you guys, UK 100. Looking for two opportunities. So the big opportunity, I don't know if it will happen today, is to sell when we get up here off these levels of resistance, off that line or that descending trend line. So that may or may not happen today or the next couple of days. But for today, this huge bull candle, whenever I see, you know, anytime from a huge candle breakout, I look at the 50% pullback. So that the 50% of that candle is also the same level almost as the low of April. So I'm looking that as an area of support. So if we come down here, and I'm not going to do anything else in here, but if I come down here and I get a bounce, a reversal, any of my patterns coming off this level here, then I'm going to look to buy and see how far we can go up. But longer term, that's a sell. So that's kind of what I'm looking at today. I'm also interested when we get to the US markets, when the US markets open, interested in what happens with Nikkei 225. So Nikkei, I'm looking to sell, but I'm going to sell up here. Okay, so if you get any move today, I'm waiting to get up there. Whether it's today or tomorrow, that's what I'm interested with Nikkei. And S&P 500, I'm looking to sell at the 10 EMA. So if I get up here again, high of Friday, bouncing off the 10 EMA because, you know, strong trend line, market coming down. So I'm looking to sell if we get up here on the S&P 500. So that's kind of I think call it the nearest opportunities for today. Otherwise, I got the same kind of thinking on every single time frame, coming off the daily support resistance and drilling down to the 5 minutes. So that's where we're at, gents.
Look,
Thanks,
all very
George.
similar, mate, don't they? You're waiting for that. I guess you're looking for a short covering rally, and then you're looking to sell pretty much all of those, yeah.
Yeah.
Which is, I mean, that's the difficulty, isn't it? Is that, you know, you're looking to sell, but you're expecting this short covering, and you know, I'm of the same opinion. I think the issue is what's going to cause it for me, you know. And as I said on Friday, it looked like there was a bit of a relief coming out. I think Jerome Powell might have even come out and said, look, you know, things aren't too bad. I've kind of got your back. We're going to get this soft landing going on. But then you get these Chinese numbers this morning, and you evaluate as well one of the reasons that the stock market went up in the way that it did is that, you know, the TINA trade, which is there's no alternative. But now there is an alternative. You know, now you've got interest rates going up. Potentially people could keep in cash. They could go and buy bonds with the yields, you know, near 3%. So there is now an alternative to having your money making its own money sitting somewhere else. Which also really is kind of really negative for the stock market, and that's the issue that I've got. I see the same thing as you, George. I see some of these short-term moves back to the upside, but I'm finding them more and more uncomfortable, which is why I've just said I'm not sure whether I can go with the short-term timeframes. I'm getting more and more uncomfortable trading them because there's little evidence that we should be going up. You know, the odd glimmer of hope that you know, that we will get through this without a recession, or the odd glimmer of hope that inflation may well calm down and the Fed don't have to move quite as aggressively, soon gets wiped away when you get the next day, and then the next news event comes out, as I say with China today. It just doesn't look good. Things just don't look good. So I'm struggling. I have to say I'm struggling to kind of flip positions at the minute, but it's going to mean I'm going to have to wait, because any rallies I'm going to have to just sit them through. But I'm sort of prepared to have to do that, I think, right now.
Yeah, I think for your higher timeframes, it's not as easier, because on the lower timeframes, as long as I'm aware that, you know, selling is probably the way to go in medium term, I can take any trade, right? As long as I see the patterns forming and manage and staying clear of news announcements and stuff like that.
Yeah, yeah.
But if you're looking, I guess, anything, 4-hourly, daily and above, it'd probably be wiser just to wait until we get to these levels of support and resistance. Probably resistance in this case, then look for your trades.
Yeah, yeah.
Yep, it's tough out there in those big time frames. I can tell you, not that easy.
Not too easy at all. Si, I see you're in the room, mate. You got any thoughts?
Yeah, how are you guys? We're all on the same page, aren't we? We're all on the same page.
We need to be thinking the opposite direction then, if that's
that's
exactly I was wondering, Si, are you getting any other indications from the crypto market to suggest, you know, because we know how correlated it is with the Nasdaq, is there anything in the crypto space that suggests actually we could bottom out around here?
Nothing.
Right. Yeah. I thought you might say that.
And I'll show you why in a minute, or I think I might show you why in a minute. Just maybe, but my weekends are just crap at the minute because my football team's going to get relegated, and I'm not enjoying the weekend.
Yeah, no, they're not. They haven't done well, mate.
Oh God, I'm struggling. I had to move someone yesterday. I've done no prep this week at all for anything because I was just so miserable after watching the football results yesterday.
Yeah. Hey, how old are you?
How old?
I got over that when I was bloody 25, I think.
Do you know what? I have been getting over it, Jeff. I really have. I've kind of resigned myself to it. But yesterday it was just like, I had a really crap Saturday because I was moving a friend and it went all wrong and it was raining and I was pissed off. And then I watched the football yesterday and I thought, oh God, I've done no prep. I've done nothing for you guys and for this week. I've not even looked at many charts, but I'm with you guys on a lot of what you guys have just said. Does anyone remember what the Super Bowl was called in 2001, or the millennium, the start of the millennium? It was called something.
Oh, was it?
Yeah. So
other than the Super Bowl,
it was called the .com Super Bowl.
Oh, was it?
Oh,
yeah. Right. Anyone remember what happened just after that .com Super Bowl in the millennium, in 2000? And what was
if it's anything to do with .com, we probably had a huge market crash in the Nasdaq.
Yeah, the bubble burst.
What was this year's Super Bowl called?
I didn't think it had a different name, did it? It wasn't called the .com one, was it? It wasn't the crypto one, was it?
Yeah. So the significance is that the .com Super Bowl was called that because every single advert was taken over by the .coms.
Right.
This year, the crypto one was called the crypto one because every single advert was crypto.
Yeah. I remember Coinbase advertising. Yeah, there was quite a few. I remember 3 at least, actually.
Share screen. I've got notes all over the place here, guys, because I'm unorganized, so just bear with me.
So everyone.
So what you're saying is there's a correlation between
NFL to blame.
Advertising on the Super Bowl.
Absolutely. I know I'm clutching at straws, but
that's all right, mate. I like it.
I'm going to clutch at straws for the next 10 minutes as well. I'm going to flash you a quick chart. I want you guys to tell me what it is. It's just going to be a quick flash, and I want you to tell me. Let me get rid of that one first, because that kind of what's that? Let's get into the Nasdaq. So I'm going to flash you a quick chart, and I'm going to take it off the screen. What's that? It's a daily chart. It's a big chart. We all know it. What's that chart there? And I'm going to shrink it. You see it long enough. Well, another look.
What's that US 100 index? It's the Nasdaq.
Right. What made you say it was a Nasdaq? Because when I looked at it, I actually blacked a bit of it out because to me it looks like the Bitcoin chart. Right. There's the April high. There's the November high, and that's the two peaks, and that looks just like the daily Bitcoin. So if I put that Bitcoin chart up, BTC, where are you? You're down here somewhere. There's those two peaks. You put that back up. Maybe it's not that similar, but it was similar enough. It was enough to make me go and find some other interesting little bits. So that it was actually the Amazon chart, the one I'm showing you, is the Amazon chart pre the .com crash.
Oh, right.
And it had the same top on the left and then the top on the right. I think I've got one that shows them both together. Yeah. So the one on the left is the Bitcoin chart. The one on the right is the Amazon chart just before the .com crash. There were 2 sets, chaps.
I'd say what I'm finding quite interesting as well with all this stuff is that there are sort of, reports kind of like bubbling in the background about India. Is it India that have regulated, they've come up with some sort of regulation for Bitcoin where before they banned it. Yeah. We've got El Salvador buying even more Bitcoin. I think there are enough stories in the background to suggest that actually the asset is good, solid, not a problem at all. But because we're going through this this situation where there may well be, I don't know whether the fire sales started already, but there may well be something going on with all this concern that's out there. We've got the perfect storm because we've got the prices rising right across the board, the Fed raising interest rates to try and battle that, but at the same time causing a recession potentially. We got this growth story which is starting to diminish. China's showing that. The US has not yet really shown it, but are we going to get 1 month where everything just collapses in one and we just get this huge kind of slew of data which says down, down, down? We're seeing a little bit with sort of consumer confidence numbers, which are suggesting that the consumer is, and retail numbers, the consumer's already suffering. So this suggests that Bitcoin will crash. It suggests that the whole crypto market will potentially crash. But what's going on in the background actually is not too bad. If we had an environment where we had stability, the stuff in the background would probably cause a pretty decent bull run because it seems pretty good to me. I think it's quite exciting because I think that if we can pick the right price or wait for the correct bottoming patterns, then actually this is a fantastic opportunity to pick up an asset that most people have been shut out of for quite some time as it rallied so hard. I'm quite positive about this in a lot of ways, mate.
Okay, I'm short-term, mid-term negative, long-term positive. This is the Nasdaq back in the millennium. That was the Super Bowl up here.
Right.
This is the 2 years of carnage that played out. Right. So that's top of that. March 2000, just after the Super Bowl, the .com Super Bowl, and the bottom is in October 2002. So. As Shukri always used to say, history doesn't always repeat itself, but it often rhymes. I love that guy sometimes. I mean, this was a fairly brutal.
Look at the symmetry there too.
Yeah, of course. So this whole correction from top to bottom was 83%. I wrote some bits and bobs down here. It was really interesting.
The other thing about this is that I think traders that have been trading in the last 2 to 5 years probably, all they've been used to is dips to the downside being bought up. I mean, the dips to the downside not lasting very long, a month or two. But you're talking about a grind that lasted 2 years, and we may well be back somewhere there. We could be grinding lower for the next 2 years, with periods where it does kind of look like everything's okay, but people aren't used to that.
No, you're absolutely right, and that's what I think is going to happen. If you actually look at some of these bounces here, I mean, there's some 30, 40, 50% pullbacks all the way down. So it's gonna con a few people. People are thinking that the bottom's in, or is it in, or is it not in? There's some big pullbacks. But I found this article. Bear with me, guys. Found this article. It was called the 1.7 trillion .com lesson, and it was out or issued on November the 9th, 2000. So I just want to show you where that was before we go on. So that was here. That article was pulled out halfway down this grind. Let me pull it back. And there's a bit in the middle. So the combined market value of 280 stocks had fallen 1.2 trillion, call it, currently from 3 trillion from their peak. So that's a loss of 1.75. So it was 3 trillion at its peak. Now, then I went off to find the crypto asset, 3 trillion at its peak. Let me get this back. And then I went to this crypto asset and I went, oh, look at that. Look, it's 3 trillion at its peak. And I thought, for God's sake. So if this thing's going to come down and that was a cleanse, right? That the Nasdaq, the .com clear out, it was a cleanse. Get rid of all the crap. We need innovation. We can't go back up till we've got innovation. So get rid of all the shit. Am I allowed to say that on there? Get rid of all the rubbish. And,
I think so. I think you're right.
SH1T, mate.
SH1T, sorry, mate. So Steve, if that was 83%, correct? That Nasdaq one. So if I pull this down 83%, that puts us to about 500 billion asset value, market cap valuation on crypto. 500 billion. Right. So I've got this device here, which some guy did for me, and I've got to get the right name for it. So this is called. It's called a BTC Fair Value Logarithmic Regression.
Holy dooly.
Fair Value Fit Band. So you can see all the tops, and you can see all the bottoms, and it's the regression band. And when you stick this little ticker at the bottom of this band, and look at the bottom lower band number, it's 500 billion. It's exactly the same as the bottom of the market cap that we just looked at. So there's absolutely no reason why we can't go all the way back down to here. And I think we're in.
What price is that? Sorry?
Price-wise for Bitcoin, or that's a good question, actually. Don't think it tells me that. But I'll tell you what it's going to be. I'll tell you what we'll do. We'll just, if we're going to knock the same thing off, let's just go to Bitcoin and pull 83% off the top. I'm on the right one. No, that's the right one there. Let's pull 83% off the top of that, assuming we do the same.
Yeah.
Assuming we do the same. 10, 11,000.
Nice. I mean, look at that lovely horizontal level as well there.
Yeah. Crazy, eh?
Mate, can you put your timeline thing on that? You know,
timeline.
Your time periods, the cycles, time cycles.
Yes. What I did the other day.
Yeah.
Hang on, mate. 2 secs. Layer ones. I'm trying to find this shit.
This is TradingView, right?
TradingView, yeah.
It's got some pretty cool tools, isn't it? TradingView.
Yeah. Let me get rid of this volume. I want to come back to that volume in a minute because we were speaking about that last week. Let's go on the daily. These are my 96-day cycles.
Yeah.
The last one didn't do what I thought it was going to do. Because we always started bottom and went high, or started high and went bottom, started bottom and went high, started high, went bottom. This one didn't quite play out. Anything in particular you got on that, Jeff?
No, I just wondered where that 500 billion
right
is going to hit with that time frame.
Yeah, I'm not going to say.
If you look to that one on the left. The one on the left was a 96-day rally, and it looks like it's come from around about that particular market.
It does, doesn't it? It does, doesn't it?
So
do you remember last week? remember last week when I was talking about, I think it was last week, was it with you guys? I was talking about the fact that we didn't have the volume that we'd had in the previous things.
Yeah.
So, well, right. I remember saying, where's the volume for the next rally? Where was it? And then it came in. The question, I saw it turn up. Obviously, it turned up last week. That was it. So what it was this one. Let me get this over. That was the one we were looking at last week. We were talking about all these big slugs of volume that came in on the capitulation, and the fact that where is it? We haven't had it on yet, and we got it last week. There's that big slug of volume on the capitulation. Yep. So yeah, there it is. What else have I got down here?
That's interesting, mate. I mean, you know, I think ultimately there are very few signals which suggest we should be buying at this particular stage. Is the message, isn't it?
I have none.
I looked at COT data as well yesterday, and COT data is pretty bleak for Bitcoin.
Yeah.
So I don't know. 3 months time. Where does that lead us? May to June to July, or end of the summer? Maybe the last quarter of the year, possibly, as we go into 2023.
So there were lots of guys. I mean, there's lots of crap out there, right? You can get weighed in with loads of rubbish, but 2 or 3 of the guys that I think are pretty spot on. A lot of them are spoken about oscillators and things that are all saying November, December this year, and a bull run into next Easter. Whether that happens or not, I don't know. But all I'm going to do is keep my eye on this. Just got to be careful buying dips, because buying dips is great. Buying corrections is horrible.
Yes. Yeah. I totally agree. And actually, if you line things up with 2 years of downside in the Nasdaq, I mean, is it possible that we're not looking at October this year? We're actually looking at October next year, or possibly even the year after.
That is my thoughts. I think it's impossible. Do you guys watch? Ever seen the All In podcast?
All In?
No.
No. Okay. So. I'll have a look.
Have a look on YouTube. Find that All In podcast. It's four. I mean, they're billionaires. They're successful guys. 4 guys over in the Bay Area, San Francisco, and every week they do a 1-hour podcast, and it is brilliant. You just the last one was number 80. 80 was, they've been talking about recession and where all the money. These guys are all VCs, so they know about funding and how often those funding cycles that used to be 6 months and yearly, they're now 3 years, and how we are. It's a really good listen if you get the chance. So episode 80 was the one I watched this on Friday, and it was like a real eye opener.
Right, I'll have a crack at that, mate. Yeah, always.
The words of Guru Shukri ringing in my ears when he said, I think it was about last, let's say November, that in February he was just going to disappear for 2 years. Is that based on that cycle, Simon?
He did, didn't he? He did, didn't he? He did. He did say that. You're right. And I don't know. He's got this guru over in Dubai who just goes and sees, and he's like this mystic Meg guy. I think it just tells him what to do. But yeah, he did say that.
He did.
He's probably right. He's probably right. But
he's certainly looking right at the minute, isn't he?
He's looking.
He's looking right. Can't him wrong yet.
How we could foresee the Russian Ukrainian invasion, I don't know. But, he was on top of it. Mind you, some people did actually call that last year. You know, there was sort of like talks of there already being the kind of the steps taken in the kind of Third World War, because Russia were making moves. And I have to say, I started getting a little bit concerned about the situation with Russia when they kept flying jets over UK waters and the UK didn't do anything. And when we had those sort of like those murders in the UK, and the UK didn't do anything, it was like, what is going on? Why are our government not really aggressively protecting this country? Why are they letting the East get away with things that other countries probably wouldn't have been able to get away with? I mean, what was it in Turkey? Turkey, they just shot them down. You know, you enter airspace, you get shot. You enter a warplane into airspace, you get shot down. You then get escorted politely away. So yeah, it was. I was quite surprised last year of sort of, you know, what was going on, and it almost felt like testing. What would the UK do if we did stuff? It almost felt like we were being prodded.
I agree with that. I agree with that. It did feel like that. You're right.
But not that I would have seen this coming, but I remember it feeling strange at the time that we it seemed like we were being prodded. I thought it'd be actually more concentrated on us. But now we've got this situation, and as I say, Shukri probably couldn't have seen this, but this looks like the catalyst to really drive global contraction for some time. India saying that they're banning exports on wheat. I mean, we got some real problems on globally, and obviously sort of COVID's still kind of sticking around. We got the situation in China.
We've got a huge famine problem coming, haven't we?
I think we have,
big
mate.
famine problem coming.
Yeah, it seems to be the case. But so far we're all kind of able to walk through it. Not all, maybe, but many people are just able to walk through it relatively unscathed. But it seems like it's just the start. If we're talking about 2 years of downside so far, what we've had a few months.
6 months at the most.
Yeah, so we could be looking at least another year. And you also have to consider what will be, because when we got the bounce back in 2002, it was because Ben Bernanke came out and said, no, that wouldn't have been Ben Bernanke, that would have been the previous whoever it was would have come out and said, no problem, I got your back, interest rates coming down. So then they start this cycle, so the Fed can move. The Fed can't really do anything this time round. Do we get this situation where we get some sort of CBDC? I don't know. Does crypto take a different kind of platform? There's so many things that factors right now, and the analogy of things don't repeat, but they do rhyme. This rhyme is probably going to be, I don't know, it's probably going to be slightly left field, because there are new assets out there, and potentially sort of like new ways that the central banks could go to try and figure out how they fix this market. Do they eventually go, okay, the dollar's done? I mean, we've been calling for that for some time. The dollar's done. We're going to have to peg this to something. Is it gold? Maybe. Is it Bitcoin? Probably not. But is it something else? It's difficult to know, isn't it? But this is something which is going to unfold in a way that I think is going to take a lot longer than the short-term bounce that we've all been used to. Happening.
Yeah. After what happened to Luna last week and the depegging of their stablecoin.
Terrible, mate. Yeah.
I think stablecoin regulation is less than a year away on the back of that alone.
Yeah.
We're at a big juncture, aren't we? And I'm just thinking this is going to take a while to play out.
I think it will, and I think it'll be one of those things that some people will hold their assets and hold it through. Those that can afford it. Others will just get rid of everything because they can't afford to hold them.
Some already have.
Some already have. Yeah, I mean the smart money's probably left already.
And where's it going?
Where's the smart money going? Well,
it's going to $1 at the minute, isn't it?
Well, I was going to say, this is the thing. You've got an alternative now. You've got an alternative because the banks are going to start paying an interest rate. You've got the bond yields that are paying. So it can go into it can sit in cash. A lot of it can sit in cash and just wait.
Well, that appears to be the case because your traditionals, right? Gold, that way.
Yeah.
Precious metals, in fact, are that way.
Yeah, absolutely.
So it's a different ball game. I think you're right. This is not. We're not in Kansas anymore.
We're not in Kansas anymore, and the dollar's going to 1.15.
Holy shit!
Yeah, but you weren't allowed to say shit.
Holy SH1T.
Yeah, well, it could happen.
Gee whiz! I'm gonna line up. I hope it goes to 120.
So do I.
Harder it falls.
In truth, I can't see how it survives that long. I mean,
I can't either.
Because the economy may well absolutely snap. This time round, it might well snap because of the amount of liquidity they've pumped into it, and they literally had no time to clear it out, no time whatsoever. Back in 2011 or maybe not that long ago, Jerome Powell was trying to raise interest rates, and then back in 2019, Jerome Powell was trying to raise interest rates, and he got so far, and then all of a sudden COVID hit, and bang, they had to sort of like sort something else out again.
And there was COVID, right? And then
there was COVID. Yeah,
print money, and it's the S&P on steroids from thereafter.
Yeah, exactly. Yeah. And actually, that COVID high, the high before COVID, looks like a target.
That's where we're going, mate. That's where we're going. We're going here.
It looks like a target, doesn't it?
Definitely. We're going there.
So we're looking at 3,500 on the S&P.
Hang on. Simon said on the 16th.
Yeah, you say it. So I'm okay with this one.
The dollar to 115.
Dollar to 115, and the S&P to 3,500.
35. Okay.
Yeah, I'd agree with that. I mean, I think 35 looks probable. I suppose the question is, does it go below that point? Not whether we go there.
I've got no idea either.
Because it could, couldn't it? I mean, realistically, we see that the magnet kind of pulling us down there. But could it go below there? And it will go below there if nothing's fixed. Yeah,
it just feels like it needs to reprice itself, doesn't it? And that's where we were before all the money started. So that's where we go back to. Yeah, we've had this silliness. Sorry, guys, it's overpriced. It's overpriced.
Yes, it is overpriced. Yeah.
It's been too long. It's just been too long. Simple.
Yeah. So we're looking at about another 10 to 15% correction on the S&P.
Let's put that on there. I think you're probably about right, mate.
Well, if symmetry plays out, we're
15%.
We're 2,200.
15%. And what's that from the highs to that point?
Probably about 4. Let's do that again. Let's try it from the top to the highs down to there. It'll be a 30% correction.
30% correction, which it doesn't feel like a
doesn't feel enough.
No,
what was the last crash in 2020?
Yeah. Fascinating stuff, mate. Well, I mean, I'm holding on anyway. I'm holding on to my FTSE shorts. I'm not going anywhere. I'm going to add to them, if anything, if I get the opportunity. Possibly some short. I mean, it looks like we're getting a little bit of a short-term bounce at this moment in time, and I suspect the short-term bounce is probably as we wait for the EU economic forecasts, and then after that, what have we got? Our monetary policy hearings from the United Kingdom. I mean, looking through the news of the week, monetary policy meetings from Australia. I think Australia is really interesting to watch at the minute, because I think the economy benefited a lot more than everybody else when the commodity prices started to spike, and they're in pretty good shape in comparison. You compare them to the UK, you compare them to the EU. Australia's in pretty good shape. They could go again quite comfortably, and they probably will.
New stat today. Australia is now, per capita, the largest number of COVID cases.
Wow!
Oh, really?
In the world, yes.
Wow.
Yeah, wow, indeed.
Okay. Assuming the Chinese are being truthful. Yeah.
Just when you think you've got an angle to kind of go and start talking up.
Sorry, mate. I just had to throw that in.
Yeah.
And to Bitcoin ETFs in Australia recently, right? I think some kind of crypto ETFs in Australia that are just showing up.
I did hear a little story that I don't know, it was crypto in general, but Bitcoin was now being accepted by.
Oh, that's right.
I hesitate to say the next bit, but the guy who told me, who knows, I'm sure he said a bank.
Yeah, I must ask him. Right.
I must ask him again, but I did hear that. Wow, really?
Yeah, there's definitely a couple of Bitcoin ETFs landed in Australia for sure.
Yeah,
over the last quarter.
There you go.
I can't remember, but I remember that as well, mate. I remember is it Japan? Nomura Holdings? No, that's them offering something. Yeah, I read something on that. I read something on Bitcoin now being accepted, and I can't remember exactly where it was, but we could find it, but you know, I'm sure you can do enough digging. But that's what I mean. You know, that's what I'm saying about the actual, you know, things going on in the background for cryptos and Bitcoin actually isn't too bad. They seem to be getting more adoption.
Yes.
Oh, and
seem to be getting traction. That can only help when it does bottom.
Well,
yeah. Oh, Emirates. It was Emirates Airlines to accept Bitcoin, and they're going to launch an NFT marketplace, which is huge. You know, Emirates as an airline. I mean, we're talking about a blue chip stock here. We're talking about a blue chip company accepting BTC. So, you know, this thing isn't going away anywhere. We got on Wednesday, we got CPI data year on year to come out from the UK, and it is predicted to be at 9.1% CPI. This is where we're sort of just looking at really ugly numbers in the UK. Interestingly, PPIs are predicted to come down. So whether that gets passed on to the consumer is, you know, how can businesses justify not passing on any price decreases they have? You know, it's in this sort of environment, I think they should be forced to do so somehow. But we got a lot of inflation data this week from different nations. Australia are in focus. Unemployment numbers. We got wage inflation as well. So it looks at this stage that you're probably staying long dollar, I guess.
Yeah.
And sticking away from
course of least resistance, isn't it?
Yeah, looks like it. Certainly looks like it. All right, guys. Well, should we wrap it up? Unless somebody's got anything else they want to add?
Yeah. Look, I can't find a trade at the moment, so I can't go anywhere.
Oh, Lewis is saying, just wonder how much El Salvador lost in BTC. Well, I mean, to be fair, mate, they've lost nothing because they haven't sold anything. You know, they're still buying, so they're okay as long as they can. You know, this is the law and the rule of trading is only put on what you can afford to lose. So if they put on what they can afford to lose and they're not going to miss that money, at this stage they're just sitting on an asset which has come down in value, and that's as bad as it is. I don't think it's that disastrous for El Salvador when it comes down to 10,000.
Trade off a bit of coke, wouldn't they?
You better ask the big O.
Yeah. So yeah, I don't know. I mean, that'd be my opinion anyway. I wouldn't have thought they'd be panicking too much. I think they're probably okay. I'm sure they've done their due diligence. If it comes down,
like those countries do.
Yeah.
They're all over it, aren't they?
we will see. We will see. Okay, guys. Well, let's wrap it up, and we'll be back Thursday. We're back Thursday.
We
next
will.
Week. I'm not sure whether I'll be in, Nick.
Stay safe, everyone.
Should we be wishing Singaporeans happy something? It's a holiday in Singapore today. What is it?
Oh, is it?
Singaporeans? I know there's a few down. There's a few people down. Maybe they're having a holiday as well. What's the holiday, guys, in Singapore? No one's telling me.
No, I don't know. Next Monday, I may.
Yeah, next Monday it won't be a show. I don't think you'll be flying, won't you?
Yeah, the following day. Yeah, I'll be sort of getting prepped and.
Isn't there a bank holiday as well?
No, I think it's the following one because of the Queen's Jubilee. It should have been, but they're flipping it to the following one for the Queen's Jubilee.
I'm away next weekend as well. Perfect.
Well, it's trading retreat week, so you know.
Yeah,
we'll be we'll be heads down, bums up, preparing for that. So I think next Monday's a no show goes.
Yeah, I mean, to be honest, I could make it in, but I'll be late.
Yeah, no show. I've got a presentation to prepare. I'm sure you do so.
Yes,
I do as well. So that's all of us.
Yep. There you go. We're excused.
Okay, so Thursday will be the show for the week, and then we'll be back the following Thursday. But as always, thanks to the guys, thanks to George, thanks to you, Si, for your opinions as well. Thanks to the guys in the room, Lewis, Dominic, VSEC day.
VSEC.
Day. Oh, VSEC. Okay, it's the day for the Buddha
Well,
festival.
that's my interpretation. I don't know what it is, but
yeah.
happy VSEC day.
Yeah. Yeah. We'll be back on Thursday then, and we will be in with John for a bit of a quiz. Check out how these markets are going. I think we're probably going to get an okay market this week, as in maybe a little bit of calm.
Relief.
Lots of data though, mate. I don't know whether the data is just going to actually completely mess that theory up. But I think chance to, time to be very, very cautious at these particular levels, at these levels. And,
I'm going to be in front of the charts a bit because I am preparing for next week. So I might dig into the 30-minute charts and see how I go.
Cool. All right. Good stuff. All right.
Well, have a good week,
guys.
Cheers,
Thanks
guys.
for being our trading buddies, everybody, and have a good week. We'll see you Thursday. Bye-bye for now.
Bye-bye.